what's going on? It is Rachel Niesman here. I am here with my husband and business partner, Jerry Niesman. And we are two parts of the Niesman team at Keller Williams Realty here in Fort Myers. And this is, I believe it's our fourth, right, Jerry? Four. We are on our fourth Talk About It Tuesday, proving to our Facebook fans and friends that we are here for you when you have nothing better to do. And even though this is our fourth Talk About It Tuesday, Jerry and I, for those who don't know, the Niesman team has a team meeting every single week. It's always on Tuesdays, and so before we came into this meeting to talk to you guys about our topic of today, which is how much money do I really need to have to buy a home? We're going to get into the nitty-gritty of home buying and what that cost looks like in just about 4 or 5 minutes. But at our Niesman team meeting today, Tuesday, I wrote at the top of our meeting notes today's date, like I always do, and quarantine week 9. So 9 weeks we have been at home, socially isolating ourselves, but that doesn't mean that we're not still working. We are helping clients buy and sell their homes every single day here in Southwest Florida, and the market's still great. We're still busy. We're still helping people out. What we have committed to do, though, is entertain you when you have nothing better to do. So those that are still at home and staying away from other people, welcome. And thanks for joining us today. I am going to handle a couple of housekeeping issues on my computer.
Hold on. Lindsay says she can't hear you.
Oh no, what do we do?
I don't know.
Turn it up?
I don't know.
Go grab the microphone?
I don't know if it's her volume or if it's us.
Lindsay, check your volume. Tell her.
Type it.
Here. Okay, give me
You
a
got
minute.
the typing.
On the thing. Let's find it. Lindsay.
Jason, can you hear us? Oh, you weren't on.
Yeah.
Oh. Can you guys hear us? Anybody watching?
I love feedback to everybody who's listening to us talk. Can you hear me right now? I want to make sure that we get this out. Jerry, while the camera's on me, I'm going to keep talking. Can you go grab the microphone from our microphone box?
Yep.
Technical issues. We'll be right back. I'll type it. You guys, I'm grabbing our microphones right now, and I'll get it pinned on so you can hear me a little bit better. And hopefully Jerry can just like scooch up to the thing a little closer. Huh?
This doesn't work on my phone.
Why?
Because I have an iPhone now.
Oh no, he has an iPhone. I'm gonna get closer and see if y'all can hear me. And keep commenting because that's how this works, right? Anybody who is listening, comment. Maybe we should get next to each other so I can be front facing. All right, let's see.
You want me to turn it, so I'm turning it around?
Nope. Yeah, you're turning it around onto you. Ask them if they can hear you.
What's up, y'all? Can you guys hear me better? Sorry, we haven't had this issue before. Are you coming over here?
Yep.
All right.
Hey, let me know if you guys can hear me or if you need us to go inside. Right now, we are sitting next to each other, on top of each other. Hi, darling.
Hi.
If you guys can hear us, please let us know. I'm going to type it in the comments right now. If not, we'll go inside. It might just be the wind and stuff like that. Jason, you can hear us? We're good? All right, I'm going to come over here to me for a minute. Thank you, perfect. So it's really windy out today, and we're trying to get the natural lighting. We appreciate you guys hanging in there with us. Once again, for those who are just joining or who it was kind of quiet at the beginning of our video, I'm Rachel Niesman, and this is Jerry Niesman. Look at this fancy camera work. We're half of the Niesman team each. with Keller Williams Realty in Fort Myers. Thank you, Jason. I appreciate that feedback. And we are here today to talk about it Tuesday. We are going to go over a topic that I think a lot of people are interested in right now, which is we are talking about the numbers and the money behind buying a home. And the question is, how much money do I need? And so I'm going to be on my computer sitting next to Jerry. He's the one that knows everything about this. I am all admin side of the Niesman team at Keller Williams Realty. So if you've ever gotten a handwritten thank you card or have won a gift from us, I've personally shopped for it, but I don't handle any of the real estate side of the business. That's Jerry. He is 10 years full-time experience in real estate, Southwest Florida. I'm sorry, Lindsay. Hopefully once you get linked up on the computer, we'll make this available and put it on our YouTube channel too. I'm sorry, baby doll. And so we're going to get into the topic. I'm going to link this over to the event page. And Jerry's going to tell you about the first, I'm going to give him a few words that get thrown around in real estate. And I think that our industry can get kind of jargony where we're using initials like FHA and all sorts of things, WinMit, which I have no idea still what it means. But I'm gonna pitch some vocabulary words that have to do with the money of buying real estate and let Jerry answer them. And we're gonna get down to the nitty gritty of how much money do you need to have in your pocket? What do you need to do for the financial side to start shopping for a home? So welcome. If you can say hi to me and just leave a note, a question, a comment, anything in our thread. We're at the end of this, we're going to draw somebody to win a $25 Amazon gift code. I see Lindsay on here now. She's already commented and entered. She's our winner from last week when we were talking on Talk About It Tuesday. And so I'm going to send you over to Jerry. I'm going to pitch the first question. If you have questions that you want him to answer during this discussion about this topic, write it out on the message here, and I will ask Jerry those questions. I'll interject and talk on his behalf, on your guys' behalf. So welcome, thank you. Here's Jerry, and Jerry.
Here, let's bring this closer, and hopefully that helps.
Helps eliminate. You're closer
All
than
right.
I could smooch. So tell me about, the first thing I want to talk about in terms of the money is everybody's question of down payment. So what is the down payment? How much money do you need? Who does that money go to? Do you need to have it in cash? And so tell me about it.
So down payment, there's all different types of loan programs. So a lot of it, number one, has to do with what exactly it is your goals are in real estate, of course. But you can there's loan programs out there that you can do 100% financing. Depending on the area, there's different programs.
Okay, but I feel like 100% down comes with some sort of caveat. So what is it?
Yes.
What's a 100% down program?
There's a couple different options. Number one being if you are a veteran or active duty military, you would qualify typically for a VA loan.
What does that stand for?
Veterans Administration. So U.S. military, either active duty or if you've gotten out of the military and are now a vet, then most likely you would qualify for a VA loan. They do 100% financing, so zero cash down. Now that doesn't mean you won't need any money. You still need to, the seller is still going to require an escrow deposit. Escrow deposit being money that you provide to them to show that you are serious. Contract does not become legal until money has changed hands. So that is the escrow deposit. That's what that is for. You would also need money for inspections and possibly closing costs. So 100% financing using a VA loan. There's also USDA loans, which is the U.S. Department of Agriculture funds those loans. Those are typically done in rural areas. So there's certain areas that qualify. It also has income limitations. So those are the ones that do 100% financing. There are also down payment assistance programs out there. A lot of times based on income, where you can do like an FHA, which is the Federal Housing Administration mortgage, or a conventional loan with as little as 3 or 5% down. They have different requirements on them in terms of debt to income ratio, and there's all kinds of requirements and guidelines that go with these different types of loans, but that's why you contact a realtor, hopefully me, or and then I can put you in touch with a lender that handles these different types of loans to be able to go through the programs and figure out which one is the best for you.
Let's talk about credit a little bit. Even though that doesn't have to do necessarily with the money of it, in theory it does, right? Because you're going to base a mortgage payment around what kind of interest rate you can get or be able to qualify for a loan or not. How much does credit affect your ability to put less down? And let's talk numbers. Like, what's the credit score that you can't get a mortgage on right now? Like, if you're below XYZ.
So there are mortgage companies out there. There's things have changed quite a bit over the last few months with this whole COVID-19 thing. But they range. It used to be there were a lot of lenders up until just a couple of months ago. There were a lot of lenders that would do loans with credit scores as low as 580. That has changed, and a lot of the lenders have increased their minimum required score to a 640. However, there are still some that will do down to a 620. I know that I am working on a loan right now with some clients that are in that range, in that 620 to 640 range, and we're getting them a loan. It's taken a little bit longer. There's some additional requirements above and beyond that in terms of debt to income ratio, in terms of late payments and things like that. There's all kinds of different guidelines that they have to add, or that they're adding to allow lower scores. I just saw one of my lenders sent me an email today saying that they have a FHA renovation loan, which allows you to use an FHA loan, which is 3.5% down payment required, and they will do a renovation loan, meaning the home can need a bunch of work, and they will fund both the purchase of the home as well as the fund the repairs in that loan.
Awesome.
With scores as low as a 580.
Wow.
So some of the lenders are starting to loosen things back up a little bit.
That's
now
great.
that we're starting to come out of this thing, and states are starting to open back up and that sort of thing. So there are a lot of constantly changing things going on, but right now, I mean, there are some loan programs that you can get into still with as low as a 580 score. And I have credit repair people available as well that we work with that can help bring your scores up in a relatively short amount of time as well. So there's a lot of different options and opportunities out there that a lot of people don't realize are available, or because one lender told them, no, we can't do it right now, they think that nobody can. So reach out and let us help.
You've mentioned a couple of times debt to income, or we use it as DTI as the quick terminology. Talk to me about debt to income, how that affects not just the mortgage process, but for somebody who's interested in shopping for a home right now, how much can you afford? Like, as a consumer, you're shopping for, maybe you're in a rental and looking to move into a mortgage. If I make $60,000 a year and I have $1,000 in bills a month, how much of a mortgage can I afford? What's the math on that debt? What's a good roundabout number for how much mortgage I can afford to comfortably pay based on my current debt load or based on my current income. What does debt to income mean, and how can you help apply it to a home buyer?
So number one, how much you can comfortably afford is a personal decision. You have to decide what you are comfortable with. I can't tell you that. A bank can't tell you that. So we can't tell you what you are going to be comfortable paying for a mortgage payment, including all the other bills that you have every month. That's a personal decision that you have to make, of course. Now, what the lenders will do is they have certain guidelines, depending on the loan program that you go with, that are going to take into consideration your overall debt to income ratio, which, or short, is DTI. So what that is the amount of expenses you have going out every single month. Typically, what they factor into that is what is your current, or what is the new mortgage payment going to be, including taxes, insurance, and any HOA fees if you're looking in a neighborhood with HOA, as well as any other debts that you have. So any other debts that you've got would be like anything that shows up on your credit report. So credit card payments, car payments, student loan payments, furniture if you financed. What else? I'm trying to think off the top of my head. Basically anything that shows up on your credit, as well as anything that comes out of your pay stub. So child support, alimony, any type of wage garnishments, anything like that are going to be factored in as a debt payment. Now, they're not looking at what your total balance is of the credit cards. They're looking at what the monthly payments are. So if your credit card has a $10,000 balance, they're not counting 10 grand against you. They're counting the, maybe it's $200 a month, let's say, that you have to pay on that. So they're factoring in that $200 a month against your, for example, $60,000 a year income, which is $5,000 a month. They're going to say, okay, you've got a $400 a month car payment, you've got a $200 a month credit card payment, and you've got $600 a month in student loans, so I just rattled off $1,200 a month. Now, on a $200,000 home, let's just say your mortgage payment's going to run, call it $1,200 a month. So now you've got $1,200 already. Now you're going to add another $1,200, so now you're talking $2,400 a month against your $5,000 a month income. And that $5,000 is before taxes. So what lenders typically want to see, and every program is going to be a little bit different, but normally they allow a maximum debt to income ratio of somewhere in the 35 to up to, I've seen as high as like 56, 57%. But again, just because that's what the bank may allow you to go to 57% debt to income ratio, that doesn't mean that you're going to be comfortable paying that, because remember, that's your pre-tax income. So you still have to figure out how much you're comfortable spending with all the other bills that you have. They're also not factoring in electricity, water, any other utilities. So, that's just what shows on your credit report and what comes out of your pay stubs.
I have an awesome question from somebody listening. So I know that we personally, we're husband and wife. We've been working together for 15 years now, living together, married. And I know that we utilize some of the free places. Let's clarify. We don't utilize some of the free places like Credit Karma and stuff like that. My husband does. And so I know that you have gone to places. Is it Credit Karma that you use? And the question is, how accurate are these free sites where you can keep your eye and tabs on these places without actually pulling and dinging your credit, compared to places like your bank will actually, or your mortgage company will actually pull these report, and how does that factor in? Can people use that as a good guide to keep an eye on their credit or get an estimate on what their mortgage might look like using that? Is it accurate information? What have you seen? Because I know you pay attention, you're like really good about paying attention to that kind of stuff versus actually having your credit pulled.
All right, so yes, they are accurate, but they're accurate for certain things. So what a lot of people don't realize is that your credit is scored differently depending on what type of loan you are looking for. So when you're applying for a mortgage, they rate things differently. So your mortgage score, or the score that a mortgage company sees when they pull your credit on an application for a mortgage, is going to be different than the score that, let's say, a car dealership would see when they pull your credit to get you a car loan, or when you look at Credit Karma or any of these other free sites. So they're not going to be 100% accurate. So let's say you pull your credit on Credit Karma and it says your score is a 680. The mortgage company may pull your credit and it may show that you're a 680. It may also show that you're a 650, or it could show that you're a 750. A rough estimate that I've seen and that a lot of mortgage lenders tell me that they see is typically about a 30% or 30 point variance in scores from like Credit Karma versus what they actually see when they pull your report. And in most cases, I have been told that your mortgage score typically shows up about 30 points lower than what Credit Karma shows you. So it's not perfect, but it gives you a rough idea, and you can see everything that's on your credit. You can get all three bureaus on Credit Karma, even though it's only owned. Credit Karma is owned by one of them, and I can't remember exact which one off the top of my head. But they do, it is owned by one of the credit bureaus. And but you can pull all three scores off of it. And you can see everything that's on your report. And that's really the biggest thing, is making sure that everything is accurate, number one, and then have the mortgage company pull it.
Awesome. And I do have, if you're following our thread at all, we do have a friend of ours who recently closed on a home with us. And they said that they looked at Credit Karma and it was horrible for them when they used it to try and get a mortgage. It wasn't very accurate. And so I would say use Credit Karma or those kinds of places to keep an eye on what is on your credit, what is reporting to your credit, but not necessarily for an accurate score. And so when you're ready to start shopping for a home, you're more than welcome. That would be the time that you would want to have a mortgage officer actually pull your credit to see that actual score. I have another question that I think is great for us to answer. One of our friends says, how does having a 100% commission job affect your ability to be approved or not? Jerry and I have been 100% commission-based employees or business owners forever. I don't think we've ever earned...
Since the day I turned 18, I've been working commission-based jobs.
100% commission-based jobs where there's no guarantee, there's no salary, there's no W-2. If you do not create a commission, you get a $0 paycheck. So tell me, Jerry, about your experience and any tips or tricks that you have. What does it look like to try and get a mortgage? I know that we have a mortgage. We're looking at getting additional mortgages because we're looking to start becoming real estate investors in the next 24 months. And what does that look like if you are 100% commission-based? What do they look like? What do they look at? How much income do you need to show? Can you use bank statements as proof? Tell me about it.
So there's different loan programs out there for different things.
I'll take the dog. so he's not distracting.
Gussie,
Hello.
go to mom.
Taking a Niesman team mascot break. Gussie says hi, everybody. All right.
So, in terms of commission-based income, typically what they want to see is 2 years worth of income in the current field. So being in real estate, we've been doing this 10 years now. They want to see 2 years. They want to see your last 2 years worth of tax returns. If you are a 1099, basically you're self-employed, they're going to want to see your full tax return, including all your write-offs and all that stuff. And what they base your income on is your net income. So, if you make $100,000, but you write off $95,000 and show a net of $5,000, well, guess what? That's what they're looking at, and that's not going to be enough to get you a mortgage. So, of course, you want to write off, a lot of people have a lot of write-offs when they own their own businesses. You need to make sure that if you are planning on purchasing a home or getting a mortgage in the next couple of years, that you are not writing off so much that you have a very, very low income, because you won't qualify with the other debts that you have. Obviously make sure that you're showing enough income to be able to purchase a home. Do your taxes properly.
Yes. So I think that's a really important point. If there's anybody who is out there and has that combination, I run all of the books for the Niesman team. I handle all of our finances. It up to communicating. I track all of our P&L and costs and stuff like that. Make sure that we're paying in quarterly as a business, as independent contractors. If you are in that combination where you are a 100% commission-based employee, and if you need help sorting your financials, your day-to-day financials, please be in contact with me or send me a message, and I can help you get all spreadsheeted up and share what I know about costing out and making sure you allocate enough to pay your taxes out of every commission check, to pay yourself as a business owner out of those checks. And then I stop at the tax side of things. I work with a tax accountant that does all of the magical things to make sure that we are properly in line with the IRS, but then also paying ourselves the right amount of money and writing off the right amount of business expenses and things like that to stay in line. And we are always working hand in hand, me with the day-to-day financials of being a commission-based employee, and then our tax accountant. Please message me and I can help get you in the right path if you have a short-term goal of buying a home, because it will drastically affect being a 1099 employee and how you set that up and what you show. And so message me and we can get together on like a Zoom call or something like that. We're happy to help you get set up so you are in the right position of being able to do so, because it does impact you.
Yeah.
And so
we had a client that almost lost being able to buy a home, plenty of income, but simply because of the way they paid their car payment from their business. It's a business where vehicles required. The business pays the car payment, but he pays it out of his personal account, and then the business pays him instead of paying the car loan company directly. And it caused all kinds of problems. We were able to get it worked out, but it was a nightmare for the customer, for the buyer. Unfortunately, it made for a very, very stressful situation for them. And so things like that, if we can, if you know that you're looking to, I tell people all the time, if you know that you're looking to buy a home in the next year or two, call us now, because we can help walk you through all of these things to get everything lined up so that you're in the position to do it when the time comes. so you don't run into a situation where all of a sudden we have a surprise. You found a home, you've fallen in love with it, we're under contract on it, we agreed on numbers and all that. You think you're packing up, getting ready to move, the seller's packing up, getting ready to move, and now all of a sudden, 2 weeks before closing, you get surprised because of some quirky little thing that their underwriters came up with on your bank statement or your tax returns or something like that. Call us. Don't be afraid. Don't think that because it's, a year or two down the road that that it's too early to start talking about it and things like, just call us and we can help walk you through all of that stuff.
All right, so I have a question that I honestly don't know if you know the answer to, and I'm excited to find out if you could explain the difference. I know a lot. I've picked up a lot in 10 years of being your, COO and helping with the operations of real estate. I haven't heard you explain this that often, so I'm curious to see if you got the answer.
You haven't heard me explain it that often, or you haven't heard me explain it ever?
I don't know. I guess I don't know. We have a question, and that is, can you tell a little bit about the difference between APR versus interest rate? Because I don't know either, and I'm here on Google, and Kate, I don't know if this is something that people don't ask us because they ask mortgage people. Do you know the answer?
I don't think people ask the question very often.
It's a great question. I'm here to learn, man. So we're talking about it Tuesday, and I'm learning something out of it. Thank you so much for asking that question.
So I am not a lender, so I may not have the answer 100% correct, but my understanding of it is interest rate is the bottom line raw strictly interest that is charged on a mortgage or on any loan, really. I mean, you have an interest rate on a car loan, on credit cards, everything. But that is the raw rate that is charged in terms of actual interest annually. The APR stands for annual percentage rate. But on a mortgage, at least, on your mortgage paperwork, on your loan documents that is provided to you by the lender that you sign, on the disclosures that you sign, and you sign these same papers 17 times, it seems like. But it is the combination of the interest rate plus any points that you pay on the loan. And then it's broken down.
You're perfect. No, you're explaining it right.
Rachel tagged one of our lenders to ask if she's on and watching this right now. But
I'm pretty sure I just saw her. But you're nailing it. I'm sorry. I'm not trying to.
It's the combination of the interest rate that's charged plus any points that you are paying to get that specific interest rate. Any points you are paying, or in reverse, any points that are credited to you. What a lot of people don't realize is most of the time there are points somewhere in a mortgage because that particular interest rate that they're quoting is not like a zero fee rate. So there may be points that you're paying slightly. It may only be $100 or $150, or it could be thousands of dollars. And points are what you pay up front for that rate, or what the lender credits back to you. So, let's say right now, and I don't know what rates are today. They change multiple times a day, and it, of course, depends on your score and all that. But let's just say that the zero rate is 3.3285. If they quote you a 3.5, then they would be giving you money back. They would be giving you a credit at closing, a slight credit, a quarter, little less than 1/4%, based on the number I threw out there. I think, I don't know, I just made up some random number. But if they're quoting you a 3.125, then you would be paying a little bit. So you'd be paying a small, few $100s or so to get that rate. So it's just the way the numbers all work out in their, in what the exact interest rate is, what that zero rate is at that given time of that given day based on your credit score and the loan program that you're doing. But the APR combines all of that. So sometimes it might be a little bit higher than your interest rate. Sometimes it might be a little lower, depending on the goofy math of it all.
Snaps for Jerry. Everybody, snap, snap, snap. Because that's exactly what, according to Google and my 90 seconds worth of research, that's exactly what it is. That's exactly what we've been able to, Google has told me. And I did tag one of our preferred lenders here for the Niesman team and added her into the group. And so if you ask the questions about APR versus interest rate, oh, good, I'm glad. Hopefully keep an eye on the little thread. Maybe she'll pop over and give us one of our mortgage people will pop over and give us a written explanation. But snaps for Jerry, like questions that I've never heard before, answered in a way that I just completely didn't expect. Thanks for everybody joining us. We are still talking about how much money do I need to buy a house and the numbers behind buying a home and how much really do you need. Talk to me a little bit about something that is I think kind of confusing for some people in the process. And I think you mentioned it a little bit. Tell me, when you think about how much can I afford, what kind of a mortgage payment or how much house can I shop for? It always comes down to your monthly mortgage payment, right? That you care about the big, unless you're paying cash, it's that big overall number. What goes into a mortgage payment? It's not just how much the house costs, right? What is PMI? Who has to have it? What does it stand for? What about flood insurance, homeowners insurance? What about what encompasses your monthly mortgage payment? When you start to shop for a home, what's included in that amount?
All right, so don't rely on the wonderful mortgage calculators that are out there, like on Zillow and Realtor.com and all that stuff, because those, every time I look at one of those, it's like you can buy this $500,000 house and your mortgage payment will only be $600 a month.
That's not accurate, let me tell you.
So maybe I'm exaggerating a little bit with those numbers, but that's basically what it boils down to is people look at it and they're like, oh, I can afford $600 a month, so I must be able to buy this $1 million home. It doesn't work like that unless you're putting a ton of money down. I have a mortgage calculator that calculates all of that stuff for me very quickly and easily, so I don't have to do it off the top of my head. But what makes up a mortgage payment is, number one, principal and interest. So when you take out a loan, it's typically over a long period of time. The most common term is 30 years. So we'll just use that, but there are shorter and sometimes even longer term mortgages out there. So on average, a typical mortgage payment, it will adjust between $50 and $60 a month for every $10,000 that you finance.
Huh, I didn't know that.
So if you figure on a $100,000 loan, your mortgage payment would be probably somewhere between $500 and $600 a month. And that roughly, that it's a rough number, but that's typically somewhere in the ballpark. So you're talking principal and interest, number one, which is the actual principal portion that you pay back to the mortgage company on the loan, plus the interest you're paying them based on that interest rate we talked about. Then you have, if you finance more than 80% of the price of the home, you normally have mortgage insurance, or what is commonly referred to as MI or PMI.
What does the P stand for? Should we make up something? Protective mortgage insurance, personal mortgage insurance.
Property? Honestly, I don't know the answer to that question.
Let's find out.
There you go. You got one that I don't know the answer to.
Learn something new every day.
But it is mortgage insurance. Primary mortgage insurance.
I think
private
I got
mortgage
it right.
insurance. There you go.
That was my first guess, was it not?
I couldn't
private
remember.
mortgage insurance.
So basically, the mortgage insurance is an insurance policy on your loan that because you're putting less than 20% down, you're basically paying a monthly insurance premium for a policy that protects the mortgage company should you default on your loan.
In case you don't pay it.
So if you don't pay it and they foreclose on you and they go and sell your house at auction and they don't get a certain dollar amount for it or a certain percentage, they have the ability to go file a claim against that insurance policy to recover more of the money. Basically what it's for. So typically there are some loan programs where you can put less than 20% down and you don't have mortgage insurance. But for the vast majority of people, if you're doing FHA or a conventional type mortgage, if you put less than 20% down, you typically have mortgage insurance factored in there as well. That mortgage insurance is different from your homeowner's insurance. A lot of people get them confused. Homeowner's insurance is an insurance policy that protects you if that particular home is damaged or destroyed from some sort of thing that happens, whether it be hurricane, flood, water line breaks, fire,
Theft?
whatever, theft.
Right.
It's hazard insurance for the property. If something happens to the property, homeowner's insurance covers it. Homeowner's insurance can be a part of your mortgage payment, but does not have to be if you are putting at least typically 20% down. Most lenders require you to do what they call escrowing your homeowner's insurance if you put less than 20% down. And basically that allows them to make sure, because your homeowner's insurance policy insures them as well, that if your house catches on fire and burns down, it means that there's money there to rebuild that house, which they also have an ownership interest in until you pay it off. So homeowner's insurance can be a part of that payment. Property taxes are another thing that can and typically are escrowed if you're putting less than 20% down. If you put 20% or more down, then you have the choice of whether you want to escrow it or not. And escrowing means that you pay it monthly to the mortgage company. The mortgage company holds it in a separate savings account where they hold that money, and then they make the payment to the municipality for the property taxes and to the insurance company for the homeowner's insurance when it's due every quarter or year, or however those things are paid in your location.
Awesome.
So escrows, what else? Flood insurance, if you have to have flood insurance because your property is in a high-risk flood area.
Hello, Florida.
Not all of Florida requires flood insurance.
Some of Florida.
But it is something that we deal with regularly. Flood insurance is a separate policy that covers if your home floods due to rising waters from outside of the home. Your regular homeowner's insurance covers if a pipe bursts inside your house and your house floods from the inside out, that's your homeowner's. If the house floods from the outside in, that's your flood insurance policy. Flood insurance is required if you are financing the home. Doesn't matter what type of loan you get. If you're financing the home and you're in what is considered a high-risk high-risk area, then the lender is going to require you get flood insurance. If you're paying cash for it, it's not required. And if you're not in a high-risk area, it's not required, but it is available, whether you pay cash or are in a high-risk or are not in a high-risk area. It's still available. And in Florida, there's not a whole lot of actual high ground, so it's usually a good idea. So that, let's see, flood insurance, and then what else would be, typically that's it in terms of a mortgage payment. But remember, when factoring debt to income ratio, the lender is also going to look at HOA fees. So even though those HOA fees are not built into your mortgage payment
I
per
didn't
se,
even think about that.
they will consider them. They will take that into consideration for debt to income ratio.
Awesome. One quick, I want to say here, we're gonna start winding down. Maybe one or two more questions regarding the financial side of things. How much money do I need to buy a home and things like that. I want to do snaps again for the Nogler family. They messaged here that they're very close to closing. We're so excited for you guys. It's been an absolute pleasure working with you again. And we have a date, so snaps for them getting ready to purchase their next home. And let us know if you have any other questions. I'm going to ask Jerry one more question, and you have just enough time to ask another question if you want to have anything specific to how much money do I need to buy a home. That's what we're talking about today, the money side of things, the financial side of purchasing a home. I do want to let everybody know that we are giving away a $25 Amazon gift code to somebody. Thank you for joining us. At the end of this discussion, so in about the next 5 or 10 minutes, you just have to say hi, wave, leave a message in the chat to let us know, and you got a chance to win. We're gonna send on Facebook Messenger a $25 Amazon gift code. I wanna tell you all about next week, next Talk About It Tuesday, and sort of what we're doing in terms of the quarantine tours, and then a couple more questions before we wrap up. Next Tuesday this was kind of all about buying the home. We're talking the next side of it next Tuesday. Next Tuesday, we are going to be talking and answering the question, when's the best time to put my home on the market? When's the best time to sell? And we're going to go into kind of the nitty gritty like we did here, only on the sell side of things. If you're thinking about selling your home here in Southwest Florida and considering it doing sometime over the next 12 months, you want to talk about, is it better during snowbird season? What about during the summer? When's the best time to put a gated community condo on the market versus a single family home in Buckingham? We're going to talk about all things selling your home. When's the best time to do it? How you can maximize putting your house on the market to get it to sell quickly. And I will be on doing that. So we have a Facebook event. If you want to follow it, it is in the Niesman team at Keller Williams Realty Fort Myers. It's like 8,000 words. But if you're on Jerry's Facebook, if you're not Facebook friends with us yet, feel free to add us. And then also too, you can see that we are the Niesman team at Keller Williams, Fort Myers, and the islands, and that's all encompassing. And so what else housekeeping? Quarantine tours. We are still doing throughout at least the end of May quarantine tours. So 9 weeks we have been now, like I mentioned, if you didn't hear me earlier, every single Tuesday the Niesman team has a Niesman team meeting where Jerry is the CEO of our business and me as the COO and in charge of the operations, get together and have conversation about all things Niesman team and what we need to handle. In my little notepad that I keep our weekly notes, I wrote at the very top today's date and quarantine week 9. So for 9 weeks, we have been adjusting to this new world, but we're still selling houses and helping clients find and sell their home if they need to sell and find the perfect one. We have guaranteed that we're going to be here for you when there's nothing else to do throughout the month of May for sure. And so every single day at 4 p.m., Jerry Niesman is here on Facebook Live, and Monday, Wednesday, Thursday, Friday, we are showing you vacant new homes or new listings that have just hit the market here in Southwest Florida. We cover everywhere from Sarasota down to Marco Island and then all the way in Cape Coral and places like that. And so those days of the week, we will be here at 4 p.m. If you're sitting on your couch with nothing to do, crack open a beer and come out and work with us. Jerry will be out showing you these homes. We're previewing them for clients that are shopping either out of town or because they don't want to go into homes and be around like touching things and stuff like that right now. And so feel free to join us, add Jerry as your friend, and join us at 4 p.m. live. Next Tuesday is our last. It's our 5th and our last scheduled Talk About It Tuesday. If this is something people are enjoying doing, we're happy to continue doing it. You can let us know via Facebook Messenger, private messenger, here publicly, if you have other ideas for what you would like us to talk about, but we could, after 10 years of full-time experience, Jerry's helped over 500 families buy or sell a home here in Southwest Florida over the last 10 years. It's just unbelievable. We love doing what we do every day. You can tell from me that I never get tired of talking about it. I never get tired of talking about anything. But Jerry loves to share his real estate knowledge. So let us know if there's a specific topic. Next week, we are talking about when's the best time to put your home on the market, or when's the best time to sell. And then we will announce the future Talk About It Tuesdays in the future. But throughout the month of May, we will be here at 4 p.m. Facebook Live. I'm going to pitch my last question to Jerry. And if you have a question that you want me to ask him before we sign off, just go ahead and leave it in the message and I will read it over to him. And then we'll draw and send somebody $25, an Amazon gift code. You don't have to see us. We don't have to mail you anything. I don't have to lick an envelope. It'll just come in Facebook Messenger, $25 Amazon gift code. But you got to say hi to me and let me know that you're paying attention and watching and listening to us about this very exciting topic of how much money do I need to buy a home? And so off to Jerry. I'm going to ask a question and then I'm going to ask him your guys' question. My final question is, talk to me about home warranties. What's the cost of it? Do you recommend it? Who should buy one? When do you buy it? How do you pay for it, etc.?
All right, so home warranties are one of those things. It's a personal preference. It's kind of like buying an extended warranty on a car. It's really personal preference and a matter of what you think, and a lot to do with who you use. I have personally had home warranties on homes, and had the home warranty company had our own personal experience. We bought a house in Atlanta when we lived there. 60 days after we closed and moved in, the air conditioner went out.
Always. I feel like it's...
it happened on the house I owned in Phoenix, too. But the house in Atlanta, the house in Phoenix, I didn't have a home warranty, didn't know anything about it. No one told me about it, had no idea. So I didn't have one, and I had to put a new air conditioner on. So then, after that happened, somebody said, oh, well, you should have had a home warranty. And I said, what the heck is that? So I learned. Then, when we bought the house in Atlanta, I had to have a home warranty. And guess what? The air conditioner went out within 60 days of us closing and moving into the house. Home warranty came in and said, sorry, we're not fixing this because it was due to lack of maintenance. And I said, well, we've only owned the home for 60 days. And they said, great, we'll refund you the cost of the home warranty. Instead of putting a new air conditioner in. And we still had to pay to put a new air conditioner in. Now, bad situation. However, I don't use that home warranty company. I do still recommend home warranties to a lot of my clients. I do not use that company that did that to us. But the home warranty company that we use and recommend, I don't know, can I say it on here?
I don't care. Go ahead, man. They're part of the Niesman team.
210 Home Buyers Warranty is who we use. They came highly recommended by Keller Williams themselves, corporate, and a number of people in our office have used them for years and recommend them. And we've been using them, and the clients that we have sent to them for home warranties have had no issues with them whatsoever.
How much do they cost?
It depends on the type of home, but typically between $400 and $600. Most of them are in the $500 to $600 range, depending on what it is that you want covered, and that's for a year. And then you can extend it every year forever if you want to. It obviously depends on the situation. I don't always recommend it. If you're buying a new home, then that brand new home should be covered by a home warranty from the builder. Whether the builder covers it themselves and they self-insure, meaning that they do the repairs themselves, or they pay their subcontractors that built the home to come back and do the repairs, or they provide you this type of home warranty, an aftermarket home warranty themselves. Either way, brand new home should always come with a warranty. But if it's an existing home, it does not come with any warranty. If you buy the house and tomorrow you close on it today and tomorrow it splits in half, you own both halves.
That's unfortunate. Hopefully that doesn't happen.
Correct.
Hopefully, well,
So-
and, that's what an inspection is for. Am
Correct.
I right? Most
So
of the time.
you're gonna get a home inspection. Typically you would get a home inspection. Not everybody does, but typically most people do. And a home inspector is gonna come in. They're gonna look at the home. Typically within the first 10 to 15 days of you signing a contract to purchase it. The downside is things can happen inside that home from the time that they inspect it to the time you close, and there's no way to really know that. So I recommend getting a home inspection. I also recommend getting a home warranty, typically on an existing home, because that home warranty will cover a lot of the major things that could go wrong in the home. Your air conditioner going out, your refrigerator going out, your stove going out, basically any of the major mechanical things that function in your home.
And is is a home warranty like you bring cash to the closing table? When do you pay for it? Can it be wrapped into the loan package? Tell me.
So it can be paid for either by the buyer or the seller.
Ooh, interesting.
Some sellers will offer it on their home up front. Most do not. But when we make an offer, we can make the offer requesting a home warranty, requesting that the seller pay for it. Sometimes they'll pay for it, no problem. Sometimes they throw a fit and don't want anything to do with it. Sometimes they'll offer to split it.
Cool.
If they don't, you can pay for it. You can have it wrapped into your closing costs, which again, we can negotiate for the seller to pay. So even though they may not want to pay specifically for the home warranty, we can negotiate enough closing costs paid that there's enough room to pay the home warranty out of those closing costs. So there's multiple ways to negotiate, to work a deal, to make the numbers work for everybody, and to get it paid for. But worst case scenario, you can pay for it out of pocket at the end if you want to. And so it's somewhere between typically $500 to $600 is the most common price range. And then depending on what you want covered, there are additional items like, let's say, not every home has a pool, so they don't build in the cost of pool equipment repair. That would be an optional item. Not every home is on well and septic, so they don't build in that stuff, but you can add those sort of things. Some homes have more than one air conditioner, so you can add a second air conditioner. So there's lots of different options to do. Typically, they do have a service fee. So if you have a problem with it, you pay somewhere between $50 and $150, depending on the warranty. I think 210's standard number is $100 for that service fee. And so, so you pay a $100 service fee. They send the technician out. The technician comes and looks at it. Of course, they're going to try and fix it first. If they can't fix it, then they are responsible for replacing it. And 210 Home Warranty has a 97.5% payout rate. So of all the claims that are filed, not just all the legitimate claims, but of all the claims that are filed, they pay out 97.5% of the claims that are filed with them, and those other 2.5% typically are claims where it's just blatant disregard. Either it wasn't a legitimate claim in the first place, or somebody just completely didn't take care of their equipment. So that's the best rate that I've seen of any of the companies out there.
All right, I have one more question. Somebody wants to know, they ask, I don't currently live there. Is it better for out-of-towners? Is it better to buy a fixer-upper or move-in ready home? So talk to me a little bit about the money behind that versus how easy or hard it is to do when you're out of town shopping. What does that look like?
Well, so that's really going to depend a lot on you and what you're comfortable with. If you are a handy person and you're planning on coming down and doing the work yourself, or if you're comfortable with hiring somebody to come do the work. If you want a home that you can really make your own, by, let's say it's dated and it needs a kitchen remodel or it needs bathrooms remodeled or whatever, or it's just beat up. If we can get it for the right price, then
you can save a lot of money.
You can save a lot of money. You can't always get them for the right price. I've got investors that I work with on a regular basis that we're making offers on properties weekly. And honestly, most of them right now, we can't get at the right price. Because the market is so hot that people are willing to pay over what the home, at least what we feel the home is actually worth. And they find a way to make the math work for themselves. And that's good for them. But my investors are not typically finding that the math works on most properties. So it really depends on the time, the market, what it is that you're looking at and what you're looking for. If you're willing to do the work yourself or if you want to hire somebody to do it. But to be perfectly honest, most people find that buying a home already done is more desirable for them because you can move right into it. You don't have to worry about doing the work. If it's a fixer-upper, do you want to live in the house while you've got the kitchen completely torn apart? We've got friends that know the answer that is miserable. And a lot of times the contractors tell you, oh, we'll have it done in 3 weeks. And then it ends up taking 8 weeks. So there's a lot of things that you got to be willing to be flexible on. Amount of time you're going to be down, the house is going to be down, or that part of the house is going to be down. You've got, versus can you move right into it, or are you going to own 2 houses and have the work done, live in one while you're having the work done on the new house, so that you don't have to live with that, miserableness of not having part of your house available to you.
I have something a little okay, so Lord knows I like to talk. And this is a little bit of a soapboxy issue for me. I think that one of the best bangs for your buck in real estate, in terms of particularly for those who are, particularly those buyers. So for those who don't know, we haven't talked about this at all yet. The question of how much does it cost to use a realtor, to have an experienced real estate agent? There are ways that you could, in theory, go out in the world and shop for a home without a buyer's agent. Here in Florida, if you are shopping for a home, you can use a buyer's agent. And the home that's being sold or that you're interested in has a listing agent. Now, you could, in theory, contact a listing agent directly and go and talk to them, but then you have dual representation questions. As a buyer, you pay a real estate agent nothing. Most of the time, you pay the Niesman team nothing.
At least here in Florida, locally.
Yes, we don't have any sort of buyer's fee. We don't charge you. You don't pay the Niesman team anything to help use our expertise and our knowledge to go in and shop for a home. We do everything from video tours. If you're out of town, we'll go and videotape. We will drive through the neighborhood on FaceTime and show you what it looks like driving up to homes in a neighborhood if you're not here. We do all of that. All the way from there to the day the Niesman team does red carpet closings for our buyers. We try and make a big deal out of closing day because we know what a process it is. We put out red carpets and banisters and bows on the door and crack open champagne. We like to make a big deal out of it. You still pay nothing. You pay $0 to the Niesman team. We get paid by the people who are selling their home. So I would say your most bang for your buck, if you are shopping for a home, we hope that it would be us. If not, we don't care who you use, but please use an experienced real estate agent, because there's something to be said in the question of, is it better to get a fixer-upper? Is it better to get a home? There's something to be said for using somebody to evaluate that on your behalf who has done 500 homes transacted versus there's 7,000 licensed realtors in Lee County. And I don't use that as an over exaggeration. That's the number. 7,000. I didn't even know there were 7,000 people in Southwest Florida. Everybody has a real estate license. Many of people are part-time realtors. Many people keep their real estate license because they moved from New York or Chicago and they're retired and they think it's fun to go and crack open houses and show, and that's great. But
and it doesn't mean that they don't know what they're doing.
Right. I'm not trying to indicate that.
I know a lot of people that do it part-time that are great.
Sure,
but
absolutely.
Just make sure that you know that they know what they're doing.
And especially this niche need of I'm out of town. Like you want somebody like the Niesman team has a flooring guy. We have a painter. We have contractors. We have an AC guy. We have and so, do you know how much hard work it has to go to do help 500 families buy or sell a home, to find a reliable inspector that you love and trust and that has done the work? When you go to pick out your real estate agent, find somebody who really knows what they're talking about, because it's the best bang you can get for your buck. They can help you negotiate and save thousands and thousands of dollars if they're that experienced. And so I'm off my soapbox now. I see we have another question, and I'm going to come back to it. I'm going to switch it to Jerry. And our last question is going to be one last question in regards to building. I've seen land for really cheap. Would it be good to purchase the land and then build? What are the pros and cons to that over already getting something done or working with a builder who owns the land? What are the options? What's cheaper? What's better?
So building new construction, I've got a ton of experience with new construction. That was the first 5 years of my real estate career, was working for a builder here in Southwest Florida, and selling brand new homes. Different builders do things differently. Depends on what you're looking for and what you want. Yes, in some instances, land is really cheap. It depends on what it is and where it is. And you can build in some areas very affordably, and other areas it is extremely expensive. It really depends on the piece of property. It also depends on what you want and what you're willing to pay for it. In most instances, especially when you're talking like true custom homes, it's hard to find a custom home already existing that fits what you want. So a lot of times you have to build it. However, usually those homes are more expensive than a comparable existing home if we can find it. When you're talking more, I don't know a good way to make it sound, but a typical like run-of-the-mill 3-bed, 2-bath, single-family home in like Cape Coral, Lehigh Acres, places where there's not gated communities and that sort of thing. You can buy brand new homes for about the price that it's going to cost for an existing home that's 10 years old or 15 years old, of similar finishes, or maybe even not as nice finishes. I'm working with a client right now on a place. They're getting ready to put an offer. We'll be actually going to take a second look at 2 of them right after we finish this video. We were looking for basically they're first-time buyers looking at starter home, 3-bed, 2-bath, 2-car garage, single-family home in Cape Coral. We found them multiple brand new homes for the same price as they're selling homes that were built between 2004 and 2007. Why would you buy that existing 15 to 17-year-old home when you can get a brand new one, very similarly equipped, similar size, for basically the same money? I don't know. I'd go new every time. Yes, it depends. So it depends on what you're looking for, but yes, you can buy a new home. There are builders right now, like the larger national builders right now, that are offering crazy deals on their existing inventory. So if you're looking for something in a gated community, which is where the national builders typically, they build, like they just develop a whole neighborhood and build all the homes in it. You're not going to buy land from them, but it also depends on the loan program. So it's much more, if you're buying from a smaller builder, typically they're going to require a construction loan where you get the loan and that loan funds them building the home. Those are much more difficult to get because there's a lot more risk from the bank's perspective. So they're harder to get. They require better credit scores. They require significantly more money down. If you own the land, a lot of times they require you to have owned that land for at least a year. The bank does. If the builder owns the land, then that's a different story. The bank doesn't require you to own it for any period of time because the builder already owns it. But then you're relying on that builder. You're only allowed to choose from between the lots that particular builder has already bought. So there's some pros and cons either way. It's definitely a good question. Call me and let's talk about it for your specific application. Let's talk and see what makes the most sense for you. But normally you got to put like 25% down on those. So if you're building a $500,000 home, 25% is a lot of money when you might be able to get a regular conventional loan on an existing house, and that same house might only cost you $400,000 because it's already existing and it's a custom home, and you only have to put 5% down.
I would say start if you are out of town and you're considering all of the options, land purchase and then finding the right home builder to meet specific requirements, or purchasing new construction that's already in inventory with one of our builders, or considering a pre-owned home, a resale that's currently on the market or coming on the market. I would say the best thing that you could do is sit down, take the time to make a list, make a list of, these are my non-negotiables. These are the things that I would really like, but aren't deal breakers. And these are my absolute cannot have in the other way, where like, if it has it, I don't want it. For some people, it's gated communities. For some people, it is what I had to have a garbage disposal, silly things like that. If you make a list and then call us and we'll help direct you in terms of,
well, and that's a big part of what
we know the builders.
Yeah.
We know what they're building. We know the communities. We know the difference between Lehigh and Alva and North Fort Myers and Cape Coral and South Fort Myers. We know we can help fit that jigsaw puzzle together.
Yeah,
but
and that's
make
a big part of our
list. Yeah.
That's a big part of our consultation when we meet with you the first time or when we talk. Whether it be on the phone or via Zoom or FaceTime or whatever.
We also do virtual consultations too, if you're interested.
That's a big part of our consultation is, what are those requirements? What do you absolutely have to have in a home? What are the things you would really want to have in a home but not necessarily a deal breaker? Or what are the things you absolutely don't want to have in a home?
Yeah.
That's something that most people don't talk about too, but there are certain types of homes that people just say, absolutely not, I don't want that. So that's all a part of the consultation when we talk and we really sit down and figure out what you're looking for. It's not just what, but who is in the home, where is the home going to be, what are the requirements, how are you planning on using the home, all of those different things come into playing a big part in that. And there's a lot of things that we've seen over the last 10 years and 500 families, that we can relate to, what you tell me you want to do a certain thing, but you want this certain type of home, and I may be able to say, hey, listen, I know that's what you think you want, but it may not work. Here's why, and let's have a conversation about it. And we show you anything and everything, but we want to number one, have a conversation and make sure. Rachel's dropping names.
I'm dropping names. I want to give away money.
So
just talking about money.
We can have that. We'll have that conversation and help you figure out what's the best best solution for your particular situation.
That's it, man. This was fun. I had a great time with you guys.
Did you get everybody in there?
I think so. I think we have all of our comments, all of our people. Thank you so much for joining us. We're going to draw one person, and then Jerry's out of here. Like he said, he's headed to show people some houses, and I need to get rid of him. But I'm going to stay here on my computer and go buy a $25 Amazon code, send it to somebody's Facebook Messenger message, and go shopping on us.
I keep seeing this, like, everybody that pops on, like, all this bring them on camera stuff. Like, I wonder if I can just randomly push that button and, like, surprise, you're on camera.
I know, that would be so amazing. Bring them on camera. I'm going to push you, Holly. I see you out there. Yes, you're very welcome. I'm so happy that you joined us. I hope that you enjoyed some of the information we provided. Again, if you're not friends with Jerry Niesman or Rachel Niesman on Facebook, feel free to send us an ad. And you see a nice mix of the cakes that I bake and our dog and our children and real estate stuff as well. We drop information on there. Send us a private message if you want to talk more. Let us know what other questions you have about this topic or others. Don't forget, next week, Talk About It Tuesday, we are going to be talking on the sell side of things. If you're interested in the topic, like, when's the best time to put my house on the market? Like, when should I sell? Should it be on a weekday or a weekend? Should it be in the fall? Should it be right when snowbirds get here next season? Should it be as soon as COVID restrictions are lifted? Should we wait 3 months? That's what we're talking about next week. We're talking to all the people who are thinking about selling, and let's give away some money. Who you got?
All right, let's see.
Somebody is gonna win some money, and I'm going to pay them some money. Gina D, who we've been chatting with. So I'm going to send you a message. This is our winner that he drew. You can see it right here. Thank you so much for joining us, everybody. This is going to go on to our, if you want to, Jerry Niesman, Niesman is our YouTube channel. We're dropping all these videos on there, including all of our quarantine tours. If you want to pretend you're a realtor, or if you want to be 7001 and go get a real estate license and see what it's like to preview houses all day long, check it out. I'm going to send you a message. Congratulations, and thanks for joining, everybody. We'll talk to you later.
Bye.
Bye, everyone.